Today, we got an electrifying breakdown of Saifedean Amos' talk at Bitcoin 2025. So buckle up because we're about to witness the unraveling of the US dollar's dominance and the rise of Bitcoin as the true financial future. And Saifedean drops a bombshell on how Tether could actually depeg. So stay tuned.
Bitcoin is booming. Are you cashing in or missing out? At Drip2 BTC, we're rewriting the rules of Bitcoin investing. Earn up to 30% ROI on your deposits, unlock incredible Bitcoin discounts, and transform credit into up to 3,000% APR growth. No hassle, just real results. Don't wait, your future is one deposit away. Drip2BTC.com. Invest smart today.
Hey guys, welcome back. Drip Coach here with Drip and Farm for Poverty, where we don't trust, we verify, and operate with integrity and transparency. So the Bitcoin conference has been going on. I think it's finalizing today. By the time you guys see this video, it should be over. Saifedean Amos cited in this talk. He is a author and economist. He wrote the book, The Bitcoin Standard, that came out in 2018, and he runs the Bitcoin Standard podcast as well. We're not going to play the entire clip from him, but we're going to play some of these highlights because it is important to understand kind of what's going on behind the scenes. And again, as Liz Alden says, nothing stops its train.
Impact would be on yields. So I think generally the literature says every 10% of the debt, if you buy 10% of the debt, you can bring yields down by 2 to 0.5%. But I'm going to assume 1%. I'm going to just have a maximum, most optimistic in all of our assumptions here to try and see how this would work out. So you buy 10% of the debt and you bring the yield down by 1%. So if we assume this is the case, and then we project the impact on the US budget, well, currently the debt is about $37 trillion. The budget deficit is about $2 trillion. And so if we assume that the budget deficit, the debt, and the liabilities continue to rise at the same rate over the next 10 years, as they did over the last 10 years, we could project it into the next 10 years. And, you know, this is a assumption because it's assuming the next 10 years are going to be as inflationary as the previous 10. And I don't think that that is a warranted assumption, but we're going to go ahead with it anyway. I think there's been a new normal since COVID, and I think this new administration confirms that the budget is going to just continue on the new normal level of spending that happened after COVID. And it's going to be different from what was taking place before COVID, which was relatively very fiscally and monetarily responsible for what's been happening since then. So, you know, looking now, Doge is seeming...
All right, we'll pause it there because basically just wanted to highlight what he's talking about in this clip. Let me pull that up. Basically, what he's saying is that he ran a forecast to basically state that if Tether grows 100x over the next 10 years, that they essentially will not have any significant impact on the debt. That's basically what this entire chart is representing, and he ran the numbers to justify that because the current debt is 37 trillion and it's going to continue to grow like he was talking about if they continue to grow as they have been, because it's historically done. And at this stage now, again, shout out to Lynn, nothing stops his train. The interest on the debt, they don't even have a way to combat that. So he's showing that Tether is a good step in the right direction, but it cannot overcome the debt that we're in. And there is essentially nothing that even other buyers of treasuries can do to offset this. And that's why we've seen the recent push from Scott Bessent trying to grow GDP. It's like, yeah, we need to focus on growth because the only way is to basically grow more, because spending less is not an option. Every presidential election that we have, they're all going to want to, you know, basically lobby on spending more, essentially. Nobody's really trying to balance and fix the budget because nobody wants to take the tax cut, as we saw with Doge and what Elon was trying to do. Not just tax cut, but just cuts in general. And there's so much in, like, quote unquote legitimate spending, like defense and Medicare, Social Security, all these different things. That's where the bulk of the money's going to. That's only going to get worse. Shout out to Raoul Pal, aging population, the everything code. So there's nothing you can really do about it. So that's what he's trying to break down in this chart, with showcasing what Tether could do and the impact they could have.
So if we run these projections, we'll see that basically by buying a lot of treasuries, growing at 60% per year, as we see in this table here, we grow the treasuries of Tether by 60% per year, and we see that this is going to bring yields down, right? That's the way in which buying treasuries helps the US government in a practical sense. The more treasuries Tether buys, the lower the yields become. So we try and calculate this and try and project it onto 10 years from now. And basically, the most optimistic scenario, according to these assumptions that I've just presented, which are all basically erring on the side of becoming more and more optimistic, it reduces the debt by about $3.7 trillion, or 5.4% of the debt over 10 years. This is,
So that is crazy. Like, it doesn't have that much of an impact, like he's stating. So it's just a drop in the bucket. So again, it's a start. It's a step in the right direction. And we also have the other stable coins out there, but Tether is the behemoth. I showed that on my last video. Then at like 141 billion, and the next is like 60, and then we get down to like 1.4. So clearly they're going to have the biggest impact, and no amount of new stable coins being spun up will have the same impact as Tether. Tether also has 100,000 Bitcoin sitting in their treasury. So that's valued at about $10 billion. And that's kind of how this will work out going forward, that they will be able to buy more and more Bitcoin with this, because remember, they're earning yield on this. And I'm not going to play the clip exactly what he's referring to, but he said there is one risk to Tether, and that is if the US defaults on the debt, or two, what they did to Russia, where they could just say, oh, Tether was involved in some illegal transactions, and they could just sanction the bonds and be like, we don't recognize those securities that you bought from us. So that is the biggest debt, or risk with Tether. And to offset that, which is what they're doing now, they can just continue to stack Bitcoins. That's a hedge against getting sanctioned and or defaulting on the debt, because that would clearly be a big blow to the crypto community. Granted, it's a drop in the bucket in regards to the total market cap, but stable coins is kind of the on and off ramps for pretty much every transaction outside of just hodling. So that would definitely have a big impact. I don't see the US doing that, but yeah, you have no idea what could happen with the next administration. If another administration gets voted in that is completely anti-crypto, or just wants to undo whatever Trump has put into place, yeah, they could easily go after Tether. They tried to do that before, right? So that is a risk, or something to keep in mind, and that would indeed cause a huge panic in the markets. But let's talk about this depegging event.
It's the smartest thing that anybody could do. So currently Tether has over 100,000 Bitcoins, which is worth more than $10 billion. And their US dollar denominated reserves and treasuries are around 120 billion. So currently they've got more than 10 times as much fiat as they do Bitcoin. However, if there's one thing we know about Bitcoin, it's that it has number go up technology. And if there's one thing we know about the dollar, it's that it has number go down technology. Now, one thing keeps going up, the other thing keeps going down. Inevitably, the thing that goes up is going to overtake the things that go down. And so, whether through default, devaluation, or both, Tether's Bitcoin reserves will likely eventually overtake its US dollar reserves. The ways in which we get there might be different, but as long as Tether keeps buying more and more Bitcoin, which they seem not to be stopping, and which seems to be a very wise thing for them to do, because it's the only way to protect themselves from devaluation of the dollar and default on treasuries. As long as they keep doing that, the value of their Bitcoin reserves is going to continue to go up, and likely it's going to overtake their US dollar reserves. Now, at this point, something that the Tether fraudsters have said would happen might actually finally happen. You know, we've always heard the Tethers break the peg, and maybe it will happen in this situation, because ultimately the real risk for Tether, the riskiest part of their business, is the Treasury bonds. Treasury bonds, which are usually presented as the safe haven, are actually the main risk for Tether. And so over time, as their bonds devalue, as their dollars devalue, their Bitcoins appreciate, and so therefore they will be able to break the backing of Tether, but they would break the peg upwards. In other words, it would be possible for them at some point to revalue Tether upwards, and so to make it so that one Tether is for $1.02.
So that would create a arbitrage, and then they would be able to basically just kind of loop buying more Bitcoin with that difference. And then, you know, that essentially removes the backing of bonds and then puts everything back by Bitcoin. So the main point of his talk is that Bitcoin is becoming more and more ingrained as a replacement to our traditional financial system. And stablecoins like Tether actually help solidify that. So for a while, they're going to continue to work in tangent, but who knows when this will take place. Like you mentioned, currently they have $120 billion in reserves of bonds and just 10 billion. But Bitcoin getting to a 10x from here to 1 million, well, that could be within the next 4 years. And then they're almost sitting with the equivalent amount. Like, obviously, by the time Bitcoin gets to 1 million, they would have more BTC in their coffers. So that could be literally where it breaks the peg at that stage. So it's happening sooner rather than later. So yeah, in the initial clip and maybe even in the thumbnail, it's about depegging, and that might sound bearish, but this is super bullish for Bitcoin and the future of Bitcoin, solidifying it even more so than what it already is in place of the traditional financial market. So want to know what you guys think about that, and if you're aware of this, you understand the weight that this statement actually holds, and kind of what your take is on that. So holding Bitcoin is the absolute best defense against the dollar's devaluation and potential default, and of course potential of what the US could do with stable coins. I'm not saying that could happen, but you got to be aware of any of these risks. The only thing that guarantees that you see the upside and the other side of this black swan event would be holding Bitcoin, because we all know that as long as the fundamentals don't change, you can ride the wave of volatility, because eventually it will course correct and go higher than it was previously. All right, that's all I got in this video. Smash that HBO special, help a brother out, like, subscribe, comment down below. And until next time, live daily and achieve